Welcome to NASDAQ Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at NASDAQ. Joining us at the market site in Times Square, we have Tim Urbanowitz. He's back with us. He's the Director of Fixed Income ETF Strategy over Invesco. We're going to take a look at the Invesco BulletShares and taking advantage of bond precision within the ETF wrapper. Tim, it's great to have you back with us as always. Before we get into the new ETFs, let's talk about your fixed income outlook and the rise in popularity of fixed income ETFs.
Yeah, it's been an incredible stretch here for fixed income ETFs as a whole broadly. You know, if you look at just their percentage of the ETF pie overall, they're still very small, representing about 17% of the overall AUM. But in recent years, and particularly this year, they're punching well above their weight in terms of the flows that they're gathering. So this year, you're looking at about 57% of the net flows have gone into fixed income ETFs. Over the past 3 years, it's been closer to 30%. So we're really starting to see investors start to really see the benefits and the advantages of the ETF wrapper, starting to understand how this has come together. And we do expect that trend to continue, as these are very advantageous to hold in many different forms.
What are the advantages? Because it's not easy for investors just to put on bond trades due to the different maturities and how bonds physically trade. The ETF kind of takes that work out of the equation.
Absolutely. So when you look at these instruments that typically trade over the counter, by appointment, you don't have a lot of transparency in the pricing. When you take those instruments, you wrap them in the ETF, you start to trade it on exchange, you really start to pick up a lot of the benefits of equity market structure with your fixed income allocations. So for investors, that means a couple things. One, from a liquidity standpoint, a lot of times you see the ETF trading at a tighter spread than even the underlying. Number two, it really levels the playing field for institutional versus retail investors. You know, you can go out as a retail investor, no matter what the size order is, and get access to an ETF at potentially the same pricing as an institution can, which is not the case if you look at the underlying. So I think that's a huge benefit. What we're focusing a lot on now, particularly with individual bond buyers as a whole with the BulletShares suite, is just showing how important diversification benefits are, where you really are able to hold a basket, whether it be hundreds or even thousands of bonds underneath the hood of an ETF, get that liquidity with the ETF wrapper.
Yeah, because there's popular ETFs out there like TLT, TBT, but they don't have that defined maturity exposure and feature, and that's what you were saying before, how diversification is so key. Tell us more what BulletShares, how they're constructed and how investors can use them.
Yeah, so the BulletShares are really designed for investors to provide that individual bond-like experience. With all the benefits that we just spoke about with the ETF wrapper. So we're talking about a suite here of investment grade, high yield, emerging market debt, and here to celebrate today the launch of the Muni BulletShares suite. So we're really talking about different products within there that are able to target a specific spot on the Muni curve or the investment grade corporate curve and get that individual bond-like experience. And again, buying one equity listed ETF ticker, you're able to get access to a basket of 200, 300, 400 different bonds that all mature or are being priced to mature in that particular year.
Got it, Tim. Thanks so much. Congratulations on the launch.
Thank you.
And thank you for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at NASDAQ.